Welcome back to Trading Hour. Well, we are now joined by Madanagopal Ramu, Fund Manager and Head of Equity at Sundaram Alternate Assets, discuss market fundamental and this top sectoral picks. Thank you so much, Mr. Ramu, for joining us. First up, what have you made of the earnings season that just went by, and post-earnings season, which are the top themes you're betting on?
Clearly, the earnings season has been muted. In line with the expectation, there are no positive surprises. The large caps are suffering on earnings front very clearly. Mid-single digit sort of a growth. Almost 75% of Nifty sectorally are suffering from a very low sort of a growth. We think there will be some improvement in Q4, but I don't think Nifty 50 large cap has any particular potential to deliver more than sort of 10% growth, because 75% of this sectoral weights are clearly seeing less than 10% sort of a growth. So that's what we see from the large cap space. But if you look at the Nifty mid-cap, there are two buckets that we see. There are companies, almost 40% of Nifty mid-cap earnings. Companies are delivering more than 15% sort of a growth. 60% less than that, but clearly almost like if you take a 150 stock universe in Nifty mid-cap, almost 40% of it, 40-50 stocks are delivering still 15% plus growth, which is substantially higher than what large caps are able to deliver in India. So today, with the way the market is seeing correction in mid-cap space, which is a very sharp correction, last time during 2017 to 2019 when mid-caps corrected, it was almost 30% over a period of 2 years. But within 2 months time period, we have seen a similar correction this time. There seems to be no differentiated sort of selling here. Irrespective of earnings, there seems to be a selling to just book profits. We feel some value zones are starting to emerge in the mid-cap space. Again, it is restricted to the pockets where earnings growth is very strong within the mid-cap. Mid-cap still has almost 40% of the stocks which are not able to deliver even a 10% growth. So that needs to be kept in mind. So clearly, there is a selling across is creating value zones in mid-caps, in our opinion.
Absolutely. There are some value zones created in the mid-caps. So what I also want to understand is in terms of when I'm looking at the allocation, and this is as the report that we had on January, you do have good exposure in terms for healthcare as well, ranging between somewhere around 10 to 15% across portfolios. Now, given the current scenario that we are seeing, or worries around the tariffs coming in from the US side, would you be making any changes on that front?
So our holding in healthcare is completely different from what is represented in Nifty. Nifty has mostly generic pharma. Probably Divis is the only CDMO player. We have a CDMO company called Newland Laboratories, and we have a healthcare company called Aster DM. So completely different companies which are having a very low representation of generic pharma. Generic pharma, we are generally negative about the long-term growth potential, given that Revlimid, a large product which is sitting in the numbers of most of the companies in the Nifty, we feel that earnings growth is going to be muted, except for one or two ideas there. But if you look at the CDMO opportunity, particularly if you look at a stock like Newland Laboratories, they have clicked upon a very large blockbuster drug where they are API suppliers to one of the global majors. Stocks like this needs to be thought very differently and needs to be taken a different view. These cannot be looked at from quarter to quarter. And today somebody is selling it. I think already some value is getting created in some of these names. So CDMO, in our opinion, is a big opportunity because we see that some blockbuster drugs globally, some specific Indian CDMO players are supplying to these companies. So if you can identify those names and invest into it and wait for 2-3 years, you have a big money to be made. And luckily now in this market correction, people are not differentiating between these ideas and other companies, right? So clearly when I said value zones are getting created, these are certain value zones where you can see that's very clearly coming through. Aster DM is a steady 15 to 20% compounder in our opinion. It is also merging with other two, there is a plan to merge with other two hospital chains, which is likely to create a meaningful size in terms of beds and something like it can move from a small cap to mid cap at some point of time. Valuation is attractive at this point of time post the correction. And decent growth in ORPA, Kerala market in which the company is operating is doing great, even Karnataka market. I think this is a more of a special situation sort of a thing where a merger can create a meaningful upside to the investors if they can get in and wait through the period where the merger happens and then the synergy benefits realized over the next 2 to 3 year time period.
Okay, sir. Just a quick word in terms of IT. You made some exit in terms of mid-cap IT. So anything specific that you don't like IT? Just a quick word on that.
So IT last year, we got a good entry level. We looked at only from a 1 year perspective. We got Persistent and Coforge at a really good bargain during a period in Q1, I believe, where they corrected meaningfully. But now the valuations have gone pretty high. We are positive on IT space, particularly mid cap, but valuations is a concern. In large cap, earnings is a concern. So that's not giving us opportunity in the large caps to enter at this point. If we see some correction happening, meaningful correction happening, we might probably look at some large caps. But mid caps clearly valuations above 40, 45 times 1 year forward. We thought that there's some money to be booked there and probably reallocate to some other opportunity during the year.
Thank you so much, Madanagopal. In mid-cap IT, valuations continue to remain a concern. Let's now slip into a short break. Dr. Kunal Damesha from Macquarie Capital joins us next to discuss their new coverage on the CDMO space and also Trump's move to likely impose a 25% tariff on pharma imports.